guys? We're getting Kevin on here in just a second. We're going to talk about some mortgages and things like that. Haven't done a live in a little bit. Hey, we got Kev up here. But I hope everybody's been having a good week, a good day. Maybe we hop up here and do this again. We haven't done one of these in a while. So we'll talk with y'all and answer some questions, talk about different things going on in the market, how to buy a house, how to sell a house, what to expect. Let's talk about some marketing stuff too. What's up, man?
Yo, what's going
Hey,
on?
how's it going?
Good, man. Good.
Good, man. I see you've been doing a whole lot of stuff lately. Every time I get online, LinkedIn, Facebook, YouTube, one of your videos is popping up doing music and doing a little bit of everything else.
Yeah, man. Listen, it's do more in 24. That's the motto.
Oh, yeah, absolutely. Absolutely. How's 24 been for you so far?
Fantastic.
Good, man. I'm glad to hear that.
Going according to plan, man.
Good. That's always good, man.
How about you?
I can't complain at all. Everything is really, really good. And actually just hired another agent yesterday. So today we were out and about, kind of just getting straight to it right away. Looking at houses, learning some stuff. He's actually a builder. So one of the good things about that is that, when he walks into a house, he's looking at it from a whole different perspective than I would be.
Yeah.
So, I'm looking at the finishings and stuff like that, the colors and kind of just the beauty of the house. And he's actually looking at how it's put together. So it's a whole different perspective, and that's really cool.
Yeah, you got the cosmetic look. He's got the structural look. So that's a win-win.
Yeah, definitely. So I'm excited about that because for any buyers that I have, that's out there, and I mean, it's going to be a big difference, I think, to go out and tour a house with him just because he has that buyer's, expertise versus looking at a house with somebody like me who I've never built a house. I can tell you what I think is going to be a good house, but he also just digging a little bit deeper. So,
Nice.
but yeah, man, we haven't done a live. It's been a while. When's the last time we did a live? I know it was last year, but
It's been too long, man. It's been a month.
I think it's almost been a whole year.
Has it been that long?
I think it's been a while. Say summer at the summer might be at the latest. Yeah.
Wow.
Yeah. But we do have some people up here in the chat or, in the live or whatnot. There's like 7 people that are watching. So appreciate you guys checking in. If you have any questions, drop them in here. Anything about real estate, we'll answer them for you. But in the meantime, we're going to talk a bit about stuff that you guys need to know, whether you're buying, whether you're selling. Probably even talk a little bit about marketing because I know Kevin's been doing a lot in that realm lately. So I don't know, Kevin, did you have anything off the top of your head that you wanted to kind of started out with, or?
Well, not listen. It's the beginning of 2024, and there's no time like the present to get in the game, right? I mean, if you think about it, it's kind of crazy that we just got in 2024, so it feels like January's done, finished.
Yeah.
You know what I mean? Like we get the 30th. It's the 30th. Got one more day, and then it's February. So we're already 1 month down. So if you haven't called Eric, if you haven't called myself, what are you waiting for? Because we're down to 11 months. And I just got this feeling, man, it's going to be a really good year. Those that purchase, I'll say this, I believe that those individuals that purchase in this first and second quarter are going to thank us a year from now.
100%.
Because while the rates are still a little on the higher side, we do believe they're going to be trending in the right direction, right?
Right. Oh,
but you don't want to stay on the fence because once the rates drop, the house prices are going back up, right? You're going to go back into the bidding wars. There's going to be more people in line, right, to get that same property. And so you can potentially end up, even with a lower rate, if the house prices go up, you could potentially be paying more for that house in your payment.
Yeah, that's true. So that's something I've actually been thinking about is making a post about that. Just because so many people think that, all right, cool, this is just what everybody keeps saying. I'm gonna wait for the rates to drop. Cool. So is everybody else. So here's the reality of things is that when all those people decide at the same time, cool, the rate's at 5%, let's all go buy a house at the same time. It's actually going to be more expensive for you to buy a house versus if you buy it now, because then you have to present a lot of cash up front. And then everybody thinks that's assuming that the sellers aren't going to increase the price. The sellers will 100% increase the price. So now you're paying, we're back to 2020, where you're paying over the real value of the house. And in addition to that, to stand out, because there's so many different buyers in the market at that time, your offer can't be what it is today, where you're willing to offer the asking price and then still ask them to cover your closing costs. But at that point, it's going to be, hey, I'm not going to do any kind of inspections. I'm going to pretty much waive a due diligence period, and I'm going to pay you an extra $20,000 over the asking price. That's already $20,000 over the real value.
Right.
And I think that we would be there as soon as, honestly, like April.
Yeah.
Because I mean, as soon as the weather warms up, so does the market,
Yeah.
right?
What Fat Joe say? Yesterday's
Is
price,
not today's. Yeah, so I mean, I think that's really that's what's going to happen in the market here, and I think that a lot of people forget that we are in a unique space.
I realize it's not just buyers that's going to be in the pool. So it's not just the people that's been waiting for the rates to drop. You have a lot of sellers who haven't sold their home because they did not want to lose their low interest rate. Well,
Mhm.
when the rates go down like we intend that they will, they're going to be in the pool too because they're going to be looking. So it's and now they're going to have the money because those individuals that purchased in 2019, in 2020, in 2021, those individuals, they're going to have equity.
100%.
So they're going to be able to outbid you. They're going to be able to put more money down, more money up for due diligence. Like they're going to have that leverage. And that's why we want you to get in the game now because you'll be able to allow the market to do for you what it did for so many people over the last couple of years, and that is appreciate, right?
Mm-hmm.
Let the market create that appreciation, and then when the rates do drop, you can refinance.
Yeah, that's one of the things. So it's a lot of people don't know this, but across as a national number, if I'm not mistaken, it's more than 50% of homeowners actually have more than 50% equity. Excuse me, if they have a mortgage, they have more than 50% equity in the home.
Mm-hmm.
So those are the same people that are also waiting for those rates to drop. So we have the people that don't have a house to sell, and they want to buy a house, but they're saying the same thing. But the side that I think most people either don't know about or are not thinking about is that, like you said, the sellers are going to pop up too, and they're going to want to buy a house. The only reason that they're waiting is just because the rates are high, right? So when the rates do drop, they're going to say, okay, cool, let me go buy a second house, maybe. Let me go buy an investment property. Let me downsize, right? But they're moving with 150, $200,000 of positive equity.
Right.
They will kill any other offers that go out. So if you wait, yes, you can wait. That's fine. Wait for the rates to drop. It'll be 5% if that's what you're waiting for, 4% if you get lucky. Sure. If that happens, just know that the people that you're competing against have $200,000 to throw on top of their offer in cash. And that's the difference that most people aren't talking about. But also I thought it was interesting, man, was that realtors aren't really talking about that either. Mortgage lenders aren't really diving into that aspect of it a lot. Everybody gives a preliminary of, hey, you should probably do it now. It's going to be more competitive, but nobody's really getting into the nitty gritty of explaining. You're dealing with people that have $100,000 more than you that are buying the same house, and they're not buying it just to live in. A lot of people are buying their second house as a rental property. Some of them made too much money and they need to buy a property as a tax write-off. They need to do something with this extra cash to get rid of it. So even for them going in, they don't mind spending the extra money and going over the value, because for them in the long run, they're saving. It's a tax write-off or some other benefit. So they're not looking at it the same. And I know for me, it's been kind of difficult having those conversations with buyers where I'm getting them to better understand your real competition is not the mortgage rate. Your competition is the sellers and the people that have the money to just go in there and buy without thinking twice. That's the real competition.
The mortgage interest rate is the only interest rate that is actually tax deductible. So you're paying high interest rate. Credit card consumer debt is at an all-time high right now. I mean, it's at an all-time high. And so you're spending all this money on the interest rate on those credit cards, but you're afraid of a 7%, 7.5% interest rate, that a portion of that is going to be tax deductible when you file your taxes next year. Like it, I think it's incumbent upon us as the lender to just continue to educate, like have these platforms where we're informing people of the benefit of just getting in the game, right? And like I said, when the rates drop, because they are going to drop, right? We don't know when, but it's going to drop. When they do, you refinance the home, and I can do that because I'm realizing people don't think I can refinance. They're like, oh, I only thought you do purchases, but you can refinance the loan, take advantage of that lower interest rate. Possibly, if you've built enough equity now, maybe get rid of PMI if you had PMI. Maybe pull some cash out and pay off some debt, get rid of some of those credit card debts, right? There's so many different options you have in ownership that you forfeit when you're renting.
Real quick, for people that may not know, what is PMI?
But PMI is private mortgage insurance. So it's part of your PITI, right? So the PITI is principal, interest, taxes, and insurance. And then that makes up your mortgage payment. That last insurance is your homeowner's insurance, but anytime you put down less than 20%, regardless of the program type, unless you're doing like a USDA or a VA loan, you put down less than 20%, you're going to have private mortgage insurance or PMI. That's insurance that the bank makes you take out for putting down less than 20%. So, it's almost like they're taking out insurance to ensure they're covered in the event you default on your loan.
Gotcha. Okay.
This is if you put down 20%, the likelihood of default is lessened because you have so much skin in the game. But some putting down 3%, it gives the kind of the appearance that maybe you don't have as much capital or the risk of default is greater. PMI is insurance to kind of cover the bank.
Gotcha. Okay. Makes sense.
But yeah, so definitely set up the consultations, man. Set up the consultations. Anybody's watching, if you're a homeowner and you're not telling your friends to become homeowners, don't be selfish. Help them, nudge them, and tell them, let them see what you're doing, what the benefits that you now have as a homeowner. And they need to set up that consultation sooner than later.
So real quick, because you were talking about the taxes, right? And so obviously I'm not an accountant, you're not an accountant, neither one of us tax specialists, we're just talking. But some of the benefits, because I actually just made a post recently about the benefits of home ownership around tax season. So what are some of you said that your mortgage interest portion of that is tax deductible, or the mortgage payment? Can you tell us a little bit more, just general high-level details about that?
You're correct. I'm not an accountant. So definitely you want to talk to your accountant, your CPA, your tax preparer, H&R Block, or whoever you're using.
Right.
Find out what the true benefits are. But when you are a homeowner, you get a statement in the mail. I want to say it's a 1098. Don't quote me on that. But there's a statement you get, and it tells you so we just got ours. You get yours every year when you file your taxes, and you submit that with your returns, and you're able to claim the interest that you paid on your house, and it helps out with your tax liabilities, right? So the benefit in or one of the benefits of home ownership during tax season is you get to claim the interest that you paid throughout the course of that year.
Are there any other benefits that you can speak to?
Well, regarding taxes, I prefer to stay out of it. That's not my lane.
No, I get you. That's true. So I want to throw this out there because I did post about it recently. So obviously you do have the mortgage interest side of it that you guys can save on, but you also have property taxes. Actually, if you all go to don't do it right now because we're live and I want you to stay here. But after this, go to my page and you'll be able to see my recent post in the caption where I talk about property taxes is one thing that you can use. If you actually work from home, which most of us do to some capacity. For instance, I'm in my home office studio, whatever you want to call it. A portion of that can be dedicated as a home office, and that will also be applicable to tax season. So something that you guys want to know. What's up? What's up, Kurt? Gabe, we had a few people join, so I just want to shout y'all out real quick. What's up, Kyle? I don't know if he's still up here. Yeah, we've had a good turnout so far. So I appreciate y'all stopping in. And then also medical home improvements. So another big thing, especially with, a lot of people, I think after people getting to go home last year and getting to, get to see family and whatnot, they were able to see some of the changes, right? Especially my generation, where we went home and you started to notice like parents are getting a little bit older, things are changing.
Right.
And so the reason I say that is because medical home improvements, such as adding railing to the bathroom, right? Making it wheelchair accessible, or just where they don't have to lift their leg as high. So you're making one of the bathtubs with a lower entry point, right?
Right.
Stuff like that can be applicable to your taxes. So bring all that up, guys. If you did anything in the realm of, making your home more energy efficient, you have a home office, obviously property taxes are going to be applicable, but also medical home improvements are all things that you might want to throw at your accountant as possible tax deductions. So I just want to add that in
Yeah, and
there.
I just double check. It is Form 1098. So if you're
1098. Awesome.
1098 is what you want to submit with your other documentation when you're filing your taxes.
Awesome.
But that's
All right.
a good point you talked about. And that's definitely a benefit is when you own your home, you can make those changes,
Mhm.
right? You can make your home what you need it to be for whatever season of life, right? So sometimes, because I know a lot of people did this during COVID when a lot of people weren't selling, they were renovating their homes to now meet the new standard they have, because a lot of people started with more children were learning from home. So there were conversions from bedrooms to classrooms and bedrooms to offices and dens to offices,
Right.
right? And so when you're a homeowner, you now have that flexibility and the authority to make those changes based on how you see fit.
Mm-hmm.
Definitely.
100%.
In home ownership, you do whatever you need to do to make your home what you need it to be.
Speaking of, are there any kind of programs where, all right, let's say somebody is a homeowner, right? Own the home, something happens in life, whatever the case may be. Let's say we have another pandemic. Garmin Homes, one of the things that they had out at the Pittsburgh, I can't remember the exact name of the neighborhood, but they had what they called a pandemic home. And inside the pandemic home, it had an entire section that was kind of for you to quarantine. It had its own kitchenette, it had its own, access to go in and out the front door. You had this door that you could slide shut, and it completely shut you off from the rest of the house. It was a glass door, so you could still see everybody and wave at them.
Right.
But it completely separates you from the rest of the house. So let's say I own a house, right? Got a family, everything like that. We need to have a pandemic room. Is there any kind of, I guess, home improvement loan mortgage kind of thing that I could take out that doesn't, I'm not necessarily doing a home equity loan, but something completely separate where I can go in to do improvements to the home?
So there's two.
Okay.
They're similar in nature, but one is an FHA loan and one is a conventional loan.
Got you.
FHA will allow you to do what a lot of people know as the 203K loan or the home renovation loan.
Okay.
And basically, you can do that on a purchase or in a refinance in this situation. So if you're saying, I own my home and I want to create a quarantine room, or it can go as basic as I need to add a bathroom. We need an extra bathroom in the upstairs quarters, or I want to change out my kitchen and bathroom cabinetry. It's a little outdated for me, and I want to, make it more modern. I want to add a bedroom, right? You just want to add some things, maybe change some things up. You can do a 2K rehab loan, or the home style renovation. And basically with those loans, what you do is, let's say the renovation that you want to do, you get a contractor and he tells you in order to add that quarantine room, right, with the bathroom and the glass sliding door, it's going to cost you $75,000.
Mm-hmm.
Well, we'll refinance the loan. We'll add the 75,000 to the current mortgage balance that you have. The beautiful part of it is that when we appraise the property, we appraise it as if that work is already done. So you're going to know what your value is going to be once the work is done. So you always get an ARV, or an after repair value. And now
Okay.
cost to do that is now wrapped into the actual mortgage. So there's no additional cost. So you didn't have to go to Home Depot, take out a Home Depot card or a Lowe's card, or have a separate debt. Everything is now financed through the one mortgage. Again, now the interest rate you're using is tax deductible on the rehab of your loan versus interest rate on credit cards. So there's a win there, right? And you just do whatever you need to do. There are income tracks on that as well. So if the work you're doing is 35,000 and below, mainly cosmetic in nature, so really no structural work being done, then you can do the 203K rehab, and it's called a streamlined K or a limited K. And there you just use your general contractor, you get your estimates, they get the work done, boom, you're finished. If the work you're doing is over 35, so there's no cap. It could be a $200,000 addition that's
Right.
right, but over 35, now you would have to add in what's called a HUD consultant. And the HUD consultant is going to work with you and your contractor. And they're like a middleman, just to make sure the contractor is not charging you, you know, $15,000 to install granite countertops when it should really only be 8 or something to that effect. So they kind of work as the middleman. They help with the inspections and make sure that the work is being done properly, right? Because the contractor is going to be paid out in draws or installments as the work is being done. So they do a phase, the inspection is done, the HUD consultant comes, the inspection is done, everything is A-OK, then they get paid, and then they move on to the next phase, right? And this is to protect the buyer. You don't want to give somebody $200,000 and then they walk away from the job.
That is true. Quick question for you. So with that, if they're paid in installments, so one, you guys have to, or HUD has to approve the contractors.
Right. So we have to have the license and the insurance of the contractor. So it's not necessarily an approving of the contractor as long as they have their credentials, right? It can't just be your boy that does work.
Got you.
Right.
Right. Yeah.
Right. It says, oh, my uncle does. No, we need a licensed contractor and we need their insurance. The HUD consultant, though, they are approved by HUD. So when you get to that larger rehab job or project, those HUD consultants are approved by HUD, and you can go right to HUD's website, and they give you a list depending on where you are geographically. You can choose from their list of HUD consultants.
Okay. Somebody's asking a question. She says, "How is this different from a home equity loan?"
So it's different because a home equity loan is a separate loan. So if you take out a home equity loan, you're actually leaving your first mortgage as it is. You're pulling cash out of your equity, and now you're going to pay whoever to do whatever job. So you're going to have two mortgages. You're going to have a first and a second. That second is going to be your home equity line. When you do the rehab loan, you're basically financing the mortgage, so you're only going to have one mortgage note, and it's going to be encompass of your current balance, if you have a balance, and the rehab portion.
Okay, I got you. So it's all right. So you're tying it into the refinancing.
Right, it's a rehab refi.
Okay. So let me ask you a question. If somebody wanted to do that versus a regular refinancing, would the rate still be the same?
No, the rate is going to be slightly higher on the rehab, not
Okay.
by much, right? Because it's still everything, like all things considered, we're going to be looking at loan to value. We're going to be looking at credit score, right? I'm looking at debt to income. But the rate is going to be slightly higher on a rehab loan versus a traditional cash out or a rate and term refinance.
Okay. I don't know. Can you see the
Yeah,
questions too?
it says, is there a scenario where a home equity loan is cheaper? Possibly. Um, the home equity, see, the home equity lines, typically, those are interest only. The average equity interest rate right now is somewhere around 12 to 14%, but it is interest only. But it's just one of those things you would have to see how much are you looking to pull out and what are you pulling it out for, right? And see if it makes sense. But it definitely could be a scenario where the equity loan is cheaper. I think that requires a little bit more in-depth conversation and really comparing to see, okay, does it make sense to just do a rehab refi, or does it make sense to do the home equity line? Because remember, if you do the home equity line, you're going to have two mortgages, and you would have to refinance and consolidate them, pay that off if you wanted to, versus the rehab. If you refinance that one, it's still only one loan.
What do you see people right now? Are they asking you for that for the rehab refinance option? Is that
I'm not seeing it as much now. I did see that, like I said, coming out of
right?
COVID, doing more of those, just given the nature of what was happening. I tell you what I am seeing right now, we're doing a lot of cash out refis. And it's interesting because the general thought is, why would somebody get rid of their 3% interest rate, 3.5% interest rate, and take on a 7.5% interest rate? Why would somebody do that? Like, it doesn't make sense. And the short answer to that is, it all depends on what your living situation is. Because what good is your 3.5% interest rate if you got $75,000 worth of debt and you're drowning every month? So you just got bragging rights. Oh yeah, my interest rate's 3.5%, but you're struggling every month. You don't have no savings. You're struggling every month to make your credit card payment. You're struggling to make your mortgage
Ooh,
payment.
this man just said it.
So
He
what?
said, "Mic drop."
So, so what we're
You got a
doing
good
is,
point, though. I mean, you're telling the truth.
yes.
Um,
So what we're doing is we're taking them, and the mortgage payment's going up. Obviously, right? They're going from 3.5 to 7.5. And their mortgage payment's going up. But in one scenario, I saved a guy $3,000 a month. $3,000 a month. He paid off his car. He paid all his credit card debt. He had a few student loans. He was able to pay all of that off. He cashed out with $100,000, like a little over, like 110, 115,000. We paid off all his debt. He put 18,000 in the bank, and his mortgage payment just went up a couple $100. But he's saving 3,000 in monthly cash flow. That guy is winning now. He was stressed out.
yeah.
He was
Oh yeah.
out.
He's chilling now. He's good.
Now he's
He's
good.
good.
He's got money in the bank. He's making his mortgage payment. I mean, listen, we're doing a lot of that.
So let me ask you a question. A lot of the people that you see doing that, but not necessarily the ones that are doing it for paying off the car, paying off a few other things that are, short-term, long-term loans. What are you seeing people do with that money that are taking it to do something fun? Whether it be buying the boat, going on vacation. Like, what are some of the things that you're seeing people do with that money that is not necessary, is more so just like, I'm getting older, I've earned this, I'm gonna go have some fun.
So I'm not really seeing a lot of that.
Really?
No, I'm not really seeing that. The three main uh, situations that I'm seeing right now is debt consolidation, investments, or they're paying for their children's college tuition. People saying, you know what, I want to go on vacation. I want to get this boat. You know what I mean? So let me pull the money out. I'm not really seeing that, and I don't know if I would. I mean, listen, you got to enjoy it, but I don't know if I would suggest that either. I would definitely use that to do something that's going to have a greater benefit,
Yeah.
right? So, I mean, paying off the children's student loans so that your kids don't graduate in debt.
Mhm.
I think there's a benefit there. Reinvesting, there's a awesome benefit there because, and we've mentioned this on other lives, you're spending the same dollar twice. So
Mm.
you put down
Ooh,
your
that
first.
was a powerful one when you used to say that. Refresh everybody on spending the same dollar twice, because that was a bar when you said that before.
So basically, when you purchase a home, you have to put money down. So you put, let's say you put down $25,000, right, on your home.
Right.
Now, that money is sitting in equity in your house. When you cash out to purchase your next home, well, let's go this way. If you want to purchase your next home, you don't have to go and save up another 25,000. You go into your equity and pull out the 25,000, maybe a little bit more, to purchase the new property. But that 25,000, you now spent it on your primary, and now you get to spend that dollar again on the investment property.
Right.
So real estate is one of the few places you can actually spend the same dollar twice.
Mhm.
So you're maximizing its use by doing that.
We got another question. That is, but to talk about spending it twice, that makes, once you break it down like that, that makes a ton of sense. And I think a lot of people, if they were to hear that ahead of time, especially renters, it might change their way of thinking a little bit about buying a house. So we have a question. Do you take a tax hit with a cash refi? Any other downside besides increase in interest rate? All right, so I'm gonna let you take that one.
Can you read it again? I don't see that question.
Yeah, do you take a tax hit with a cash refi? And are there any other downsides besides an increase in the interest rate for doing the rehab refi?
No, I mean that's your money. When you own a home, you basically are setting up your own bank. So you're paying yourself every month. You're paying yourself, right? Of course, you got interest and taxes, and that pays the interest and the taxes to the municipality, right? Your homeowner insurance, but the principal portion that you're making a payment every single month, that's your money. You're putting that into your own, basically your own saving. Your house is now your new savings account. So I can't think of a. Let me be fully transparent. Like I want to be honest. I'm trying to think of a drawback. I mean, so the drawback, if there's a drawback, the drawback is there'll be two. If you want to call them drawbacks, right? So let's just be real. Let's say you purchased your house 10 years ago. So you took out a 30-year mortgage, you purchased 10 years ago, and now you're going to refinance and you go back into a 30-year. Well, yeah, now you're starting over at 30 years. So you had paid 10 years off. So you only had 20 years left on your mortgage, but now you're back to a 30. That could be a drawback, but you don't have to do a 30. You could do a 15-year. You could refinance it to a 20-year. I always say take the longest term possible, and then if you want to be aggressive with your payments, then make extra payments to still pay it off in 15 years. So I think the term, right, if you're going from only having 10, 15 years left, 20 years left, and now going all the way back to having 30 years left on your mortgage, that can be considered a, you know, uh, a downside to refinancing. Also, maybe having a higher mortgage balance. So if you took out a mortgage at 350, you paid it down to 250, and now you're pulling cash out. Now your loan is back up to 315. So now you borrowed money. So now your loan amount is back higher. But it all depends on what you're using the money for. So I don't know if I would call it a downside, but I mean, I guess those are the only two things that I can really think of is now you have a higher mortgage balance. So you use the equity to either pay off debt, pay off student loans, go on vacation, buy a boat, whatever you use it for, rehab. And now you're potentially starting your term over again at the 30-year mark. But outside of that, here's the contrast. When you're renting and you want to pay off the student loan debt or you want to pay off the credit card debt, you can't go to your landlord and say, I need to borrow some of my security deposit.
That is true.
Right? There, you have limited options. And that's, I guess, that can all be summed up with that, right? Home ownership gives you more options.
Sure.
I'm about to put that on a t-shirt.
Home ownership gives you more options.
More options.
I don't know. You might be onto something there. Yeah, that was a good question. That about what are the downsides to it, if there are any. So she said, thank you for answering that one. Yeah, if you're in the thing watching this right now, if you got any questions that come to mind, by all means, type them in there, ask away. What else do we need to know for 2024 for buying a house? I mean, we know we don't need to wait, right? Because you can always refinance and the
You know what?
price.
I'm gonna switch gears. If
Okay.
you want to purchase a home, start off with the mindset that I'm gonna purchase a home.
Mm.
Let's eliminate all excuses, right? It just requires a conversation. Student loan debt doesn't have to deter you from buying a home. Lack of a down payment doesn't have to deter you from buying a home. Credit. My credit's not where it needs to be. Well, get it where it needs to be. All of these are controllables,
Mm-hmm.
right? So if home ownership is something that you really want, the first place you need to start is credit. Because
Right.
once your mind that, you know what, I'm going to purchase this home, you'll start making decisions that line up with what you say you're going to do. But you
Right.
don't make up in your mind that you're going to purchase a home. You'll continue to go out every weekend. You'll continue to spend money that you should be saving. You'll continue to not be intentional about increasing your credit score. But when you make up in your mind and you make a decision, you decide to do something, right? That's what side, that second part of that word is a final. There's a finale to it. Genocide, suicide, homicide, there's an ending. So when you decide to do something, there's no more options. It's like, I've made a decision that I'm going to become a homeowner. And then you start making other decisions that line up with that purpose. But it has to start off in the mind. You have to make up in your mind that I'm not going to let anything deter me. Interest rates, the market, I can't control that. But I can control my spending. I can control my savings, right? I can control paying my bills on time. I can control lowering my debt. I can control my attitude. All of those things will play a large role. And when you start doing those things, you'll see things just start working in your favor, and you'll realize, oh wow, if I just cut back here, and I'm not saying you can't do anything fun, right? I'm a proponent. I'm for living life. But if you want something, go for it, and don't let anything stop you. Because here's the bottom line: most of us are paying. We're making a mortgage payment now today.
Yeah, 100%.
You're making a mortgage payment. It's just spread out. You got your rent, and then you got your car note, and then you got Netflix, King or Spectrum, Disney Plus, Peacock, Paramount Plus, Hulu, right? Prime Video. You got your Best Buy account. You got Capital.
Oh yeah, yeah, a little bit of everything.
I mean, listen, you're and when you total all those up, you're making a
Mm-hmm.
mortgage payment. It's just not your mortgage payment. So some of this just requires a little bit of discipline.
I agree with you 100% on that. That's actually one of those things that, so I have some clients, and this goes back a few years, but I remember, um, you know, they were very, very, as far as income goes, no issue with buying a house. As far as standard, you guys are there. The issue was in the credit utilization. And I remember running into them while they're out and about, and they were paying for stuff with a credit card. And this is like a week or 2 weeks after the mortgage lender told them that they basically need to cut up their credit cards and stop using it. So mindset, right? Mindset wasn't there to actually buy a house. Mindset was more on the I want to live life, right? I want to touch on something real quick. Speaking of that, going back to what we were talking about earlier, and what you said people were doing with the equity when they were taking out of their house, $300,000 at a time. My thought, right, as a millennial was let me go live life, have experiences, whereas the baby boomer generation is looking at that more as like, oh, I have $300,000 of money that I can take and be even more secure, right? Because you were talking about paying off college tuition for their kids, paying off bills. So that's a generation very much that wants to own, right? Whereas my generation more is into renting, doing subscription based stuff.
Right.
So, but going back to what you said about, I just want to touch on that real quick. Going back to what you said about mindset. 100%. I mean, it's a new year. It's a lot of people come into it with the whole, oh, it's a new year, new me, 2024. I'm gonna buy a house, but then it's just like a gym membership, because after February, when those tax returns start to hit, and you have to make a decision of do I buy new clothes, do I plan that cruise, that vacation, or do I buckle down, keep the money in my wallet or in my bank account, whatever the case may be. Hit up Kevin, hit me up. We had that conversation. We start getting you into a house, because the thing is, like, that tax return comes in, great. I got $20,000 came back from the government, et cetera, et cetera. But at the end of the year, if you buy a house, you'll have $20,000 in equity there, probably more than that realistically. But you can use that money, buy the house, and then you have tax time that comes around next year. Now you have that initial money that you were talking about that you get to use twice. Plus you have the tax money. So it's all about mindset. You know, what you're going to do now is 100% going to affect 6 months from now, 8 months from now, next year.
Yeah.
So got to get that mindset
100%.
right.
100%.
All right. Well, I know that you're over there. Where are you at again? You're at the beach?
I'm in Tampa. I'm
All
not,
right.
but I'm in Tampa at a sales conference. Listen, I'm here, and I am. It's a time of learning and education so that I can be a better loan officer for you. So I'm gonna come back ready to go. I'm supercharged up. The first day. Today was the first day, and the information that we got was unbelievable. Stuff I'm definitely I'll be sharing with you that I think will really help, especially with some of your newer agents, help them get their foot and everything like that. So super excited about what we're doing here at Crown Home Mortgage, and definitely any way that I can help, hit me up, shoot me a DM here. I'm gonna put my link in the chat.
Okay.
If you want to set up a free consultation, just go to my calendar and set up the time, and we'll do a discovery session, and we'll figure out next steps for you.
Sounds good. Good. All right. You guys, as always, you can always hit the button. I think it's up in the top left, I think. But you can always go to his profile, shoot Kevin some questions if you got questions about getting a mortgage or doing a rehab, refinance, or anything else. Of course, if you have questions about real estate, hit me up. I'd love to be your agent, work with you guys, answer any questions. And then also about marketing as well. So if you have some questions about marketing, I'm diving into that a little bit more in 2024, because we're doing all this stuff with social media. I guess it's time that we finally kind of turned into a little bit of a business. So
Yes, sir.
we're gonna do a little double dipping this year. You know what I mean? So
Yes, sir.
I'm excited about. Matter of fact, me and you gotta get together because we gotta talk about some stuff offline. So,
Okay.
but yeah, man, enjoy yourself down there in Tampa. Have some fun. I'm excited to learn what you learn when you get back. So, till next time. All right,
All right.
man. I'll see you later. Have a good one.